Ryan Schultz with Lead the Way Capital. I have Dan Besmer here, a good buddy of mine. We played college rugby together. He's an accountant, but Dan, go ahead and introduce yourself.
Yeah, so my name's Dan Besmer. Currently a practicing CPA, and up until about 2 weeks ago, I was in worked for a public accounting firm. Did that for about almost 10 and a half years. So practicing CPA and have a lot of experience just as far as being around the industry for a long time. So I just recently transitioned to the industry side, but up until 2 weeks ago, my background was in public accounting. So.
Nice.
Yeah.
It'll be good for all those investors out there.
Yeah.
I know COVID-19 it's real popular right now. We'll definitely get into that at the end of this. But just real quick, do you think you should pay for accountant, or do you think you should do it yourself? How do you feel about that?
I assume you're talking on the tax preparation.
Side,
yeah.
Yep.
I would say it depends on your situation. I'd say if you're just a typical person who gets a W-2, maybe you and your wife or whatever have a W-2. You don't have, even if you have a TD Ameritrade account where have a limited investment activity. I would say that it's perfectly acceptable for you to do the tax return yourself, maybe using like a TurboTax or a H&R Block online or something like that. Where you get into more complexity is if you have, I would say crazier things going on, such as if you're passive investing in real estate, if you have partnership investments where you're getting what we call a K1, which is kind of like your share of the partnership, things like that. And I'd say is the more and more your income goes up, the more and more ability that you have to take advantage of what we would call itemized deductions later on. So, but I would say for most people, in a simple perspective, they could probably use like a TurboTax or whatever online to do a good job of summarizing everything and putting it in kind of plain English terms. And I'd say, they run like specials and things like that, just like they do like sales at, Nordstrom or whatever. So
right.
To be honest, I used H&R Block to do my tax return, and I did it for like $45. So.
And you're an accountant. So.
Exactly. Well, it's otherwise you're trying to read the forms, and it can, especially to a common person, it can be confusing.
Yeah, no, it definitely gets wordy in there for sure.
Exactly.
Yeah, I've been using an accountant for years now, just because I have those rental properties and other little investments that.
Absolutely. If you're running your own business or something like that, I would highly suggest it. I don't think there's probably any way, unless you're a CPA yourself. You can hear my dog whining in the background.
It's all right. Everybody's working from home these days.
But as far as, the more and more complex your situation, the more probably complex accountant that you need. Right. I worked at a large regional accounting firm. Unless you're pretty wealthy or have some complex, things going on, probably not the need for that high of a level of an accountant. There's plenty of tax preparer only type accountants that are pretty reasonable as far as getting your tax return done, if you want to go that route. So.
Gotcha. So what I've struggled with, and I finally found a good one, was finding a good accountant and for a reasonable price. Do you have like suggestions for that?
It's really, I would say, just kind of like anything else. I'd probably just reach out to, other people that that might be a business, if you're a business owner and, or, you got to do that for the first time, maybe reaching out to a couple of friends or people that wouldn't mind sharing their information. It's just like any other service-based business. Accountants kind of get their reputation based on their people referring other people.
Right.
That's probably the route I would go, and you can kind of get a couple different perspectives from other people and make your decision there. I would say, like I said, if you don't have a super complex tax situation, then I think there's plenty of people out there that can help
You
you.
can do it for a reasonable price. Yeah.
Exactly.
Yeah. So yeah, once it starts getting a little bit more complex, what I've noticed is when I first tried to find one, a lot of people didn't really know what to do. Like I finally found an accountant that actually invests in real estate too. So
Okay.
it made it way easier, and it is the most, I think he did. So I had 3 properties, and he did it for like $700, or I think it was like $1,000 to do my
Yeah.
with all those.
Yeah. I mean, there's no problem interviewing your accountant and asking them what they do and
Right. Right.
understanding that. So,
Oh,
yeah.
cool.
Yeah.
Let's see here. What's the most important thing about taxes? I know this is a big question, but what do you do?
Well, I mean, I'll tell you what I think the most misunderstood thing about taxes is, and that's, people, they're like, oh, I got a $2,000 refund this year, and I got a different result the previous year, the next year, and they think that is somehow something was missed or something like that in their tax return.
Right.
Um, what people don't understand is, there's money coming out of your paycheck from the government every pay period, and really, the tax that you are withholding kind of determines your refund at a very simple level. So, for example, if you're making a bunch of money and you don't withhold anything for taxes, then you're going to owe a bunch of money on your tax return because you didn't withhold anything. Um, the the to the contrary, you might be over withholding because you choose your withholding kind of based when you get a new job. You might fill out what we call a W-4 as the
Right.
tax, and it kind of walks you through how many dependents do you have, so how many kids, or do you have a spouse or whatever, and then it recommends a level to withhold that, and that's kind of how they choose how much to take out of your paycheck. And let's say that changes and you don't update that, then you may be withholding too much, probably withholding too much or withholding too little. And that's the
Gotcha.
general driver of the refund or the taxes that you owe. Not necessarily, oh, like I need to search for some deduction that's going to change it.
Right. No,
So,
that's interesting. Yeah, because you do hear that a ton. I hear that
yeah.
a lot from my friends, and they're like, last year, I paid $1,000, and this year I'm getting $1,000 back, and they're like, I don't even know what changed. So,
Right, right. And, I'll say sometimes, there could be a driver based on, if you have a kid, you get, in the year, you all of a sudden get a deduction for that kid. So that could be,
yeah,
uh, people in that situation, that could be a, reason why things are changing.
you're gonna have a nice deduction pretty soon, right?
Yeah. Getting two deductions,
2 deductions.
twins. Yeah.
That's a, that's a, that's smart.
We didn't have them for the deductions though. I'm
Oh,
not
that's
that,
good. That's
not
good.
that big of a nerd. So.
I wasn't sure if that was your accounting background, just kicking in. Need some more deductions.
Can't hurt though, right?
Right. Um, that kind of answers that next question, which is what is typically missed in taxes. Kind of what you were saying is like, just people not realizing that their deduction is going to be, or their return is going to be different that year because of what's going on.
Right. And it could also be because, hey, I'm contributing to my 401k more or something like that. You can contribute to your 401k either pre-tax or post-tax in uh,
Right.
certain plans, depending on what company you're in. So, if you're contributing one way, you could have less income in that regard. So.
Yeah, I contribute a lot to my health savings account. I think that's a cool little.
Yeah, absolutely. That's a pre-tax savings, so you can, not not get taxes taken out of that money and then use it for medical expenses. So anytime you can
Yeah.
do things like that, the better. So,
Yeah, I didn't use it all last year. I'm like, why do I need this? And then I broke my nose this year, and I'm like, yep, it's all gone now. So.
yeah, we're all getting older. We're gonna have medical expenses one way or the other.
Right, for sure.
Yeah.
Now it's starting to get into like write-offs, a little bit more into write-offs, and what's the difference between kind of like a standard deduction and an itemized deduction?
Yeah. So I guess we'll take the standard versus itemized first. So um, basically, how the tax rules work is that at a very high level, you get money from your paycheck. Uh,
Mm-hmm.
that's kind of your main income driver, we'll say, in a simple term. There's a couple other things that go into it, and then basically you come down to what they call your adjusted gross income, which is, we'll just call it, for simplicity's sake, the money that you're making from your job or whatever.
Right.
Um, and then they have what they call deductions. So there's two different routes you can take. One is what they call the standard deductions. If you did no calculations or anything, you get for like a couple, it's $24,000. So you don't have to calculate anything. You just say, I want the flat $24,000.
Is
And
that up from last year too? Is it?
no, I think it's the same as last year, but it's up from the Trump tax cuts.
Gotcha.
From 2 years ago, there was a big change in the standard deduction, which I'll talk about in a second. But
Yep.
essentially, you're just taking a flat deduction. It's what everybody gets based on. Then there's something called an itemized deductions, which those are specific things that let's say medical expenses over a certain threshold. There's calculations in all these things, but basically let's just say there's 10 ways to get itemized deductions. If you kind of add up all those,
Right.
and those are higher than the standard deduction, you take the itemized deduction because it gives you more of a benefit, which is reducing the amount of taxes you're going to have to pay, essentially.
Gotcha.
Up until 2 years ago, if you owned a house, likely because mortgage interest is one of the itemized deductions, you could potentially be taking an itemized deduction. Now, I would say for the common taxpayer, almost everybody's taking the standard deduction because the standard deduction has been raised a ton.
So high.
Yeah. And so, for a common taxpayer, I'd say, the vast majority of the time you take the standard, unless you had something crazy like a bunch of medical expenses that you had to pay in 1 year. And we're not talking like $1,000, we're talking tens of thousands of dollars.
Right.
So, I'd say the most cases you would expect to take the standard deduction. As far as write-offs go, so that's more geared toward like if you're a business owner, probably we would say. So like business expenses are considered write-offs, so they reduce your taxable income, we would say. So for example, meals are bad. Meals and entertainment are a bad thing or a bad example. But I bought something for my business. Well, that's
Like a vehicle.
yeah. Well, you'd write that. That's more of a depreciation type thing, which I think maybe we talk about later. But essentially, that would reduce your income on your tax return.
Right.
So in general,
Gotcha.
that's what a write-off is from a business perspective.
All right. So I'm a big fan of, I call it the four pillars, basically owning businesses, owning real estate, owning paper assets like stocks and bonds, and then owning currencies and commodities. And I've been studying just the super rich people, and basically they diversify by each of those categories. Instead of just like buying stocks and then getting diversified within that portfolio. That's not diversification for them. It's when they own all those different categories.
Right.
The two I want to talk about, one is real estate, which we talked about a little bit, and the other one is a little bit about stocks.
Mm-hmm.
So everybody hears the term depreciation on investments. Just describe what depreciation is.
So depreciation, I would say let's use a car example. So you go out and you buy a new car, um, you know, let's just say for 10 grand, which is way too low, but you drive that car for 5 years.
These
Your
days, that's way
car
cheap.
is your car really worth 10 grand anymore? No, it's not. It's been used. So depreciation is kind of a way to ratably uh, lower the value of your car or your asset over time, because theoretically, you drive your car into the ground. Let's just say you drive your car into the ground in 10 years. Well, by 10 years, your car should be worth zero. So
Right.
it's a way to reduce the value of your asset over time. From a tax perspective, there are different rules regarding, because depreciation is a deduction on your tax
Right.
return, or a write-off, as you said. So there are specific rules in taxes where, depending on the type of asset, you might be able to take that $10,000 car that you have and depreciate it all on day one. And that's an advantage for tax. It's really just a timing difference.
Right.
So time value of money, you'd rather have more money now than have it spread over 5 years. So therefore you're getting the tax benefit, right now. And a lot of tax planning in general is really involved in accelerating deductions. So you get that time value of money benefit from getting a tax deduction immediately, potentially, rather than spreading it over 10 years or something.
Gotcha. And so, on investment properties, what's interesting is you can make money, but then again, you can use depreciation to make it looks like you're losing money, correct?
Exactly.
Yeah. So
And that's really just a timing difference, right? Because
right.
theoretically, let's say you hold an investment, real estate asset for years and years and years. Well, all of a sudden, maybe that depreciation goes away because you've used it up, and now you're showing income. So, yes, that's a perfect tax strategy to make money, have cash flow, but not really have to pay taxes on that in the full regard.
Let's see. Is there anything else kind of as far as advantages or disadvantages with using depreciation? Do you think most people out there should, if they're in the investment world, should look at depreciation a lot within their investment?
Yeah, I mean, anytime that you can accelerate a tax deduction, you should try to take advantage of that, I would say. So yeah, I would say that is if you're getting into things like real estate, it's something definitely to model out and understand and look into.
Okay. And then on the paper assets, such as like stocks, when you buy and sell a stock, how do you report that on your taxes?
So stocks really, I guess, so for a common investor that might be invest in some stocks and maybe probably isn't a day trader, we'll say.
Right.
That's all going to come kind of like your W-2 comes at the end of the year to report on your tax return. That's kind of your income information from your job. You'll get a similar statement from like your broker. And it'll tell you exactly where to put it on your return, but investments can be taxed at different rates, what they call a capital gains rate, and it can depend on if you held it for a long term, which is longer than a year, or short term, which would be like less than a year. So,
Right.
yeah.
And what's the percentages like? So if you do short term versus long term, right
I should know that, shouldn't I?
now? Luckily, we have a computer.
Short-term capital gains are taxed at like you're at a higher rate than a long-term capital gain. So like I think long-term capital gains like 15 to 20%, whereas short-term capital gains are more like at your income tax rate. So.
All right. And then also stocks can create dividends.
Yeah.
Can you explain what a dividend is and how that's taxed as well?
Yeah. So a dividend is essentially a share of the company's profits. So if a company makes a bunch of money from selling widgets, we'll just say they pay out their payroll, blah, blah, blah. Then all of a sudden they have a net income, net amount that they made. They can either, and then they pay taxes on it, and then they have money left over. They can either use that to reinvest it in the business. Let's say save the cash for a rainy day, use it to build a new factory or something like that. Or they can choose to give money back to their owners. So a dividend is essentially taking some of those profits and distributing them out to the owners. So if you own a stock, you technically own a part of that company. They pay a dividend, you get that money, and those dividends are taxed as well. So they're taxed at your ordinary income rate.
All right. Now let's get into the good old coronavirus, that COVID-19. How do you think that, I mean, we've already started to see how it's impacting taxes, but what have you seen on your end as far as being an accountant?
Well, I mean, obviously they pushed the tax filing deadline back. So that's, I guess, the biggest thing. And that's really obviously because of companies and individuals, not being able to get their taxes done because they're quarantined, at their own house.
Right.
Additionally, I think the IRS is really, they're already, I would consider, short-staffed, and this is not making things any easier. So, if anything, it gives you more time to do your tax return, which is good if you're kind of a slacker. But if you're not, I think
there's
and
a
your
lot of
return
that
is
there.
simple, there's no issue with filing it now. I mean, I honestly, I filed my tax return probably 2 or 3 weeks ago, and I've already received I got a refund, so I
From the
received my
federal. So
federal
it took you
refund.
2 weeks. So that's good. I mean, is that pretty standard what you've seen in the past as far as timelines goes?
Yeah, I mean, I think the less busy they are, the quicker you're going to get your refund. So like on a normal cycle, April 15th or whatever is the deadline. If you file your return in February, you're probably going to, if you do a refund, you're probably going to get it quicker if you file it in
Right.
February than if you file it on April 15th when they've got a ton of volume. But, I think that if you wait till the new deadline, it's going to take longer. State, you have to obviously file state tax returns too, depending on the state and the resources that state has. Those usually take a little bit longer. So, for example, I'm a Missouri resident, so I have not received my Missouri refund yet. Just depends. So,
Gotcha. Do you have to file your tax returns if you are just getting unemployment insurance?
yeah. So unemployment is considered taxable income on your tax return. So you should, if you're affected by that and you're getting unemployment at the end of the year, just like you would get a W-2 from your job, you'd get a similar like form with from the government with your income, and you would report that as income on your tax return. The stimulus check that a lot of people are supposedly getting, that is not taxable. So that should be, just money that you're getting that you don't have to report. So.
And I know they keep changing the stories, but most likely it'll just be electronically transferred in your account if that's how you currently file.
Yeah, so I guess from a tax, they're kind of running it, or they're kind of keeping track of it through the IRS, obviously, because that's probably the largest database they have of people and how to pay people if they need to.
Right.
So like when I got my refund from the IRS this year, I did it through direct deposit. So I entered my, bank information on my tax return.
Mm-hmm.
They just wired the money into my account. So I believe if you have that, some people, old school, maybe they want to write a check and mail it in. If you do that, they don't have your bank information. That's probably you're probably gonna take a little longer to get your stimulus check, I would guess. If you have direct deposit on file with the IRS, then it'll probably be much quicker. So
Nice.
that's kind of,
that's good to know.
and who knows when they're going to start paying them? I mean, they say 3 weeks or a month from now, but who knows?
Right.
So
that system's crazy. I know. And then in the small business world, they're doing that. The PP is it the PPP? I think is the payment protection program. Have you seen anything on that? And
to be honest, I'm not as familiar with that yet. I've been really looking on the individual side, but I know I've read a little bit about it. I know it's supposed to be a really good deal with the SBA where if you maintain employment or even hire new people, that you're basically getting a loan that you may not even have to pay back. But I'm not as educated on that.
Right.
But pretty good incentives out there.
Gotcha. Awesome. Well, I appreciate you being on Lead the Way Capital. Everybody, please subscribe and like this, and you'll see this video come out soon. Appreciate it, Dan.
All right. Appreciate you having me.
Thanks.